Berkshire Hathaway, the conglomerate led by Warren Buffett, invested in Capital One Financial Corp and sold its stake in Bank of New York Mellon Corp in the first quarter of 2021. According to a regulatory filing, Berkshire bought 14.2 million shares of Capital One, a bank that specializes in credit cards, auto loans and online banking. The stake was worth about $1.8 billion at the end of March. Capital One shares rose 5.3% in after-hours trading, following Berkshire's disclosure of an 11.3% ownership interest. Meanwhile, Berkshire shed its entire holding of 75.6 million shares of BNY Mellon, a custodian bank that provides financial services to institutions and corporations. The stake was worth about $3.6 billion at the end of 2020. BNY Mellon is the world's largest custodian, with nearly $47 trillion assets under custody and/or administration. Berkshire had been a shareholder of BNY Mellon since 2007, but had been reducing its position in recent years. The moves reflect Berkshire's strategy of investing in companies that have strong competitive advantages, growth potential and reasonable valuations. Capital One has been benefiting from the recovery in consumer spending and credit quality amid the pandemic, while also investing in digital innovation and customer loyalty. BNY Mellon, on the other hand, has been facing pressure from low interest rates, fee compression and rising expenses. Berkshire also made other changes to its portfolio in the first quarter of 2021, such as trimming its stakes in Chevron, Amazon, General Motors and Activision Blizzard, and exiting Taiwan Semiconductor Manufacturing Co. Berkshire also added a new position in Aon plc, a global professional services firm that provides risk, retirement and health solutions. Capital One is an attractive investment for Berkshire Hathaway, given its strong performance, digital capabilities, and diversified business model. Here are some reasons why Capital One has a competitive advantage in the online savings market, with its 360 performance savings account offering a high-yield rate of 3% APY, no monthly fees or minimums, and access to a top-rated mobile app. This account helps Capital One attract and retain customers who value convenience and security in managing their money. Capital One has also invested heavily in its digital capabilities, such as cloud computing, artificial intelligence, and digital wallets. These technologies enable Capital One to offer innovative products and services, such as virtual card numbers, Eno, a chatbot assistant, and Zelle, a payment network. Capital One expects to complete its migration to the cloud in 2020, which will reduce costs and improve efficiency. Capital One has a diversified business model that spans across credit cards, auto loans, commercial banking, and retail banking. This diversification helps Capital One reduce its exposure to any single segment or risk factor. For example, Capital One has been growing its workplace dining business over the past several years, which provides catering and hospitality services to corporate clients, 10. This business helps Capital One generate stable and recurring revenues from a different customer base. Bank of New York Mellon, BNY Mellon, is one of the oldest and largest banks in the U.S., with a history dating back to 1784. It provides custody, asset management, and wealth management services to institutional and individual clients around the world. However, in recent years, BNY Mellon has lagged behind its peers in terms of growth, profitability, and innovation, and this has led Berkshire Hathaway, the conglomerate led by Warren Buffett, to exit its position in the bank. BNY Mellon's growth has been sluggish compared to other large banks. In the third quarter of 2021, its revenue increased by only 2% year-over-year, while its net income decreased by 4%. Its assets under management grew by 12%, but this was lower than the industry average of 16%. Its assets under custody and administration increased by 14%, but this was also below the industry average of 18%. BNY Mellon's market share in both segments has been declining over the years. BNY Mellon's profitability has also been weak compared to its peers. Its return on equity, ROE, was 9.5% in the third quarter of 2021, while its return on assets, ROA, was 0.8%. These ratios were lower than those of JP Morgan Chase, Bank of America, Citigroup, and Wells Fargo, which are some of the largest banks in the U.S. BNY Mellon's net interest margin, NIM, which measures the difference between the interest income and interest expense as a percentage of earning assets, was only 0.7%, while the average NIM for U.S. banks was 2.5%. BNY Mellon's innovation has also been lacking compared to its competitors. Although the bank has invested in technology and digital transformation initiatives, such as cloud computing, artificial intelligence, blockchain, and data analytics, it has not been able to leverage them to create new products or services that can differentiate it from other banks or attract new customers. For example, BNY Mellon does not offer any consumer banking products, such as checking accounts, savings accounts, credit cards, or mortgages. It also does not have any online or mobile banking platforms for its retail clients. BNY Mellon's focus on institutional clients limits its ability to diversify its revenue streams and expand its customer base. These factors have contributed to Berkshire Hathaway's decision to exit its position in BNY Mellon. Berkshire Hathaway first invested in BNY Mellon in 2007 and gradually increased its stake to about 10.4% by 2019. However, since then, Berkshire Hathaway has been selling off its shares in BNY Mellon and reducing its ownership to about 3.1% by 2021. In May 2021, Berkshire Hathaway disclosed that it had sold off its entire stake in BNY Mellon and bought a new stake in Capital One Financial, another large bank that offers consumer banking products and services. Berkshire Hathaway's exit from BNY Mellon reflects its preference for investing in companies that have strong growth prospects, high profitability, and competitive advantages. Capital One Financial fits this profile better than BNY Mellon because it has a more diversified business model that includes credit cards, auto loans, retail banking, and digital banking. Capital One Financial also has a higher ROE, 15%, ROA, 1.3%, and NIM, 5%, than BNY Mellon. In conclusion, BNY Mellon has lagged behind its peers in terms of growth, profitability, and innovation, and this has led Berkshire Hathaway to exit its position in the bank and switch to Capital One Financial instead.